Testing, testing, 1, 2, 3. Testing, 1, 2, 3. Can't keep Ed's waiting. You guys ready to go? Another trading day? Ready to go? Go, go, go! There it is, right there. Hey, Daniel. Hey, we're thinking late next week. Wink, wink, nudge, nudge. You know what I mean? I. Yeah, wink, wink, nudge, nudge. Say no more. Hey, good morning, everybody. Welcome to forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always wise to stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. I provide to you every day market analysis, and I teach you market analysis techniques so that you do not have to rely on anyone else to make decisions. You don't need advisors. You don't need other traders. You don't need managers. You can do it all on your own. That's called independence. I'm here to teach you how to fish. I'm here at 7:30 in the morning, Monday through Thursday, here at forex.today, first Friday of the month. I'm over at FX Street. We're trading on farm payrolls live. So I'm here to make you a success. You can consider it like an investment from Trader's Way of time and energy and resources and karma, really. We want you to succeed. You know, and it's not necessarily an altruistic thing. We want you to succeed so that out of respect and loyalty, you fund a live trading account one day when you feel like you're ready. Not before you feel like you're ready, when you feel like you're ready. And that you, because of your newfound skills and your patience and your discipline and the blood, sweat, and tears that you put into this, you start trading real money and you slowly grow your trading account size. And over the course of time, you slowly grow your lot size. And Trader's Way becomes your prime broker for your successful forex trading business. I think that's a really good model. Yeah, I think that's a really good model. Thank you, Trader's Way. We really appreciate that. Show your thanks by opening an account, even a demo account. It's the first step to falling in love. You like love, don't you? Then open a trading account. All right, so we got charts. Yep. I got 2 cups of coffee. That's how I feel. How do you feel? By the way, I tried to upload yesterday's video and YouTube had a problem. And if you could see the YouTube account, you'd see 3 uploads of the same video, and it says you can't upload MP4s. You need to have proper video formats. And I'm like, MP4 is a proper video format. So, you know, I don't know. Blame the Russians. It's Russian hackers. Die! So anyways. Oh, Skip says he went live a couple of weeks ago. Very happy with Trader's Way. Hey, thank you for that. Yeah, thank you for that. Cool. All right, so let's get into the facts. Now, we had FOMC yesterday, interest American. It was very underwhelming. And there's a couple of things, if you really, really, really dig into what they say, maybe you make something out of nothing. Maybe it's confirmation bias and you see what you want to see in the words. But I don't, they don't seem like they want to raise interest rates sort of forever. Do you get that feeling? Like they want to get to maybe 2.5, and then maybe that's it for a while. I don't know, right? And as they dump their bonds that they've purchased, what do they have? $2 trillion worth of bonds, something like that. Once they start dumping those, it depresses interest rates on the long end of the curve. That's where retired people get their money, right? 10-year, 20-year, 30-year bonds. So maybe they don't want to do that and all that kind of stuff. So it seems like they want to normalize quickly, but not not 5%, not 6%. Doesn't it seem like that? Is there some you don't get that feeling? Maybe my microphone's not working. But anyways, that's what it seemed like. That's what they want to do. Just get going, but not too far, I guess. I don't know. But whatever, who cares? All right, so what do we have? We have beast up here, pound versus yen. We've identified a couple levels of support and 4, 5, 6, 7, 8, 9 levels of resistance. This is a sell zone. This is a buy zone. Is that how you remember it? 138.50. You see, off of here, and you could even go all the way back here, right? I mean, why don't we do it just so it's purty? Okay. Is that how I remember marking up the beast yesterday? If you're a bull, maybe here, but down here is better. If you're a bear, up here is great. Anything in the middle is very, very iffy, especially with the interest rate decision. Right? How about this? You guys are so quiet. Can you please confirm that there is sound? Well, wait. I know Daniel responded to my. Yeah. Okay. No, there's sound. All right. Yeah. Yeah. So. Yeah. Yeah. So what's going on, bro? Is that how you remember it? So after the announcement, right? Beast fell all the way down and touched exactly the line. 38, 56 and a half. It's amazing, huh? Sound is low? Is that right? Sound shouldn't be low. Yeah. Maybe if you stand on your left leg and hop up and down, you'll hear better. Yeah, I know they're messing with me. So anyways, that's some killer support, huh? Boy, did that go by quick. Just like, look at that, just straight down, straight up. So do you think people had orders there? And that's how I want you to think of it. Like, don't worry about this particular trade. How did I mean, first of all, let me ask you, how much money does it take to completely and instantly reverse the path of the pound yen? $10,000? $100,000? Yeah, at least 150 bucks minimum, bare minimum, right? I mean, it's a lot, right? So let's just assume you didn't make this trade. Okay. Can you imagine now how many people did? By people, I mean institutional investors, right? They're people too. Can you imagine how many orders must have been sitting exactly there? Right? Think of it. And all the retail traders, all the amateur traders, just kind of chasing things around, right? But where were the real orders? Okay. Where were the orders, the real orders, the real institutional orders? What can you learn from this observation, and how could you behave differently in the future? Okay. And it's kind of like what I've drawn here. What if these are like billions of dollars worth of orders sitting up here? Well, where were all the orders down here? I mean, right? Not sort of in the middle. There might have been a few here, and amateurs were chasing around, making 15 pips here, 25 pips there. But ultimately, the billions and billions and billions were just sitting here waiting, because there's no way they all just pulled the trigger manually, right? Look at right. So what's your takeaway? What can you take away from this? You tell me. You can't just let this go. All right. This is after a huge fundamental announcement, right? A change in central banking policy, an increase in interest rates in the reserve currency and the largest economy in the world. Yeah, maybe the pivot. Yeah, maybe the pivot's important. But, we see WS1s all over the place, right? What I'm saying is, what were the large players in the market doing? How do they act in the market? And is that an opportunity for you to maybe behave in similar ways, right? They had orders sitting at obvious support and resistance. Now, it looks like they did use this pivot, or they used the price action in the past, all that kind of stuff. But notice that they had those orders there waiting. Somebody said, I'm bullish on this, and I will buy at support. Okay, just like yesterday or the day before, we identified all this stuff, and I said, look, it's going up. If you are a bear, right, this is where you sell. Do you remember that whole process of this big move moving up? If you are a bear, this is where you sell, and you'd be a fool to buy it. So we did all of this stuff. There were orders to sell there. Way down here, there were orders to buy. And amateurs are setting up picnic blankets in the middle of nomad's land. And they're like, is that machine gun fire? Yeah, you picked a real terrible spot to have a picnic. Okay? So if you want to behave like a professional trader, observe what professional traders actually do for a living. They identified support and said, and really, if you're like, let's say you're just a pure speculator, just pure speculative guy, right? Or gal. You're like, well, I'd buy it down here, I'd sell it up here, and I'll leave the rest for everybody else. Is that how you want to behave? Okay. If it is, you need to take like screenshots, either like literally or figuratively with your mind, and you need to really be cognizant of what's happened, how you'd like to behave, and you need to manifest this in the future by behaving in similar ways. Okay, is the market range bound or trending? Yeah, you notice if you bought here, sold here, bought here, sold here, bought here, sold here, bought here, right? Depends on the time frame. Well, in this particular time frame that I'm looking at, right? That does change things. And in this case, you probably want to get rid of your monthly pivots because it's just not enough time, right? So decide whether you are a bull or a bear, and identify the levels of which you would consider to buy, or the levels you'd consider to sell, depending on your bias. But if you believe the market is trending, so basically your bias is neutral, you could either just not trade it, find something else to do with your money, or buy at support and sell at resistance. You see what I mean? Or if you're still a long-term bull, only buy at support and take profit at resistance until you start making higher highs. And you stop doing that as soon as you make lower lows. Like this drop here, you're like, whoa, go back to being neutral. Okay. Buy at support. Right? And notice how it's getting tighter and tighter. Right? So it's tunneling. Eventually, the longer the tunnel, the bigger the break. Okay. Neato, huh? Look at the Aussie. Good place to buy or good place to sell? What's on your mind? See that Aussie dollar there? How do you react when you see a chart like that? Well, I wouldn't sell it. Okay. Right? After a move like this, I still want to buy it. Using moving averages, you'd buy at the 21. As long as we're above the 21, you can stay aggressive. It's super dangerous because those are weekly pivots, right? So maybe you want to switch over to your monthly pivots and say, well, if something unusual happens today, now what would cause this to continue to go up? We would need something unusual to say this unusual thing allows us to blow through our weeklies. Anything unusual going on this week? Of course, the answer to that would be the Fed. Okay. Because that wasn't an Aussie dollar move, was it? That was a Fed move. Okay. So you could buy the 21 and see if you can get higher up into here. Okay. Notice the M1 predicted the M3. That's spooky, isn't it? It's pretty spooky, isn't it? Hitting this early in the month predicts, well, at least the central pivot, but look at it's a reverse, right? M3 to M1 to M3. That's a weird month, isn't it? No, I'm not going to look at Aussie versus Kiwi because to me they're the same thing. No, no, they're not the same thing, but they are both commodity currencies. Their economies are highly linked. I know some people would. I just don't. I don't trade those two things together. Right? And same thing like Aussie CAD, Kiwi CAD. They're all commodity currencies to me. And as a global macro trader, I'm either risk on or risk off. So I wouldn't combine the two because to me they're the same thing. If there's risk off, global macroeconomics look poor, I would believe commodities would fall, and therefore commodity currencies would fall because of lack of demand. So I wouldn't trade them together, right? I don't get it. So uh, even though you could probably find some trades there, and they probably even make sense, with my simple childlike mind, I just can't comprehend that. I need to keep things clear. Okay, right? They're all apples to me. Okay. So anyways, yeah, not a great place to buy. I wouldn't sell it either. Um, but what would you do after a higher high, for example? Let's I was trying to figure out a way to write this down. So let's do it this way. Let's do, okay. Okay, you see something's happened there, right? We were in a high, lower high, right? High, low, lower high, lower low, lower high, lower low, lower high. What? Okay. So now what could you do? What could you expect, I guess is what I'm saying. You could expect, let's say, a retracement and then an extension, right? I can eyeball it with precision. Look at that. That was exactly 618. Wow. Anyways, yeah. Okay. That actually 618 predicts a 1382. I'm sorry. That says up here. Oops. Okay. You see what I mean? That's a plan, right? So if you were a bear, though, if you were a bear, are you at resistance? I would mark this whole area as resistance if I was a bear. Could you sell? Yeah, you totally could. Right? Yeah, totally. How do you want to play it, bro? You probably play it like a double top, in this case, triple top. Where's the neckline? I'd probably play it here. Okay. So in this case, what I would look for if I was a bear, um, at the New York Open, it's going to break. It's if it's going to break to the downside, it needs to do it in the New York Open. Don't you think? Like, when else is all this new shorting going to take place? Okay, and you'll see a drop like that, and then your second opportunity will be to catch the pullback and do it again. So you got one coming up, right? You got, now look for psych levels and all that kind of stuff. So we're kicking off 76. So maybe 76.50. That actually says 77. Is it really that high? 100 pips. Wow. All right. Anyways, look for the lower high, predicting the lower low, which would predict a lower high, which would predict a lower low. If you're a bear, that would be setting this up. I'd have to identify previous levels of resistance, which we've actually already done. So, like this area. Right. So that would, is there a psych level in there? 76, 30, 76. 50 is a little high. Yeah, so I don't know. Somewhere in there anyways. We'd have to go back to the weeklies. Somewhere in there, and then maybe back up. Who knows? Okay. That's if you're a bear. I'm not saying it's bearish. I'm saying if you're a bear, that's what you'd be thinking. That's what you'd be looking for. And remember, if you're a bull, you're going to want to buy it off that 21. Do you know why? Because that's why we use the 21. If you don't buy it off the 21, then you should just delete the 21. Because what is it doing there if you don't use it? It's a dynamic level of support in this case, right? So if you don't use it, just delete it because you don't know what you're doing with it. Same thing with like the Stokes or the MACD. If you're not using it, just delete it. It's taking up real estate. Okay. The hourly 21 EMA is the 4-hour 5, which means you're extremely bullish and aggressive on the 4-hour. Okay. What was the gray triangle called, please, Wayne? They're called triangles. I went to Insert, Shapes, Triangle. Is that what you mean? Or you're asking me are they butterfly Gartley patterns and stuff? I don't know, dude. Call it whatever you want. I don't believe in all that mumbo jumbo. Okay. Here's what I think. If you're bullish, right, look for a retracement in which you might consider buying. I looked at a 382, 50%, 618. This 618 is also an M2, which is also a buying pivot. So if it did that and then it gave you a reversal pattern up, I'd probably believe it and I'd buy it. Is it a Gartley pattern? Sure. Is it a bat? Is it a butterfly? I don't know, dude. Whatever you want to call it. I'd call it a donkey. Right? That's a donkey. It looks like a donkey to me. Doesn't it look like a donkey to you? Yeah. I should probably come up with a really cool name and then sell it to people as a trading strategy. It's a it's an it's it looks like a donkey kicking, right? So it's a kick it's a kicking ass trading pattern. Yeah, that's my kicking ass trading strategy. I'll put a whole thing together and sell it. Be great. Get the ass kicking triangle pattern. I don't know. I can't even come up with a cool enough name. All right, I'll let someone else sell it to you. All right. Oh yeah, it's a trading indicator. You need it. You totally need it. You can't trade without it. All right. Yeah, okay. So let's take a look at gold. Oh my gourd. Becky, look at that price action. Didn't even get my pullback. Okay. But it did react to this line and that line a little bit. I'm going to try to squeeze some credit out of this. Do you guys remember doing this? Right? The one fact we knew is that you couldn't sell it here. You remember all of this? And this is last week, trading it north. Why? The counter trend trade. Do you guys remember all these things? This is the counter trend trade. We have it like pointing up. I think you can see that, right? Came back down, support, 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 support. Look at, I have M2 going up into here, right? I think I had to go into M4 and then I said, but let's just respect the monthly pivot. I mean, look, I guess, look, lucky, right? Lucky, totally. Fed came out, made a decision, dollar weekend, great. Totally lucky, I get it. But it's still the proper trading pattern that we had set up, right? And if you sold here, you didn't lose money, or at least you shouldn't have. But I only see this pointing up, do you, right? Funny thing is, I'm a bear on this. Okay. This is a potential sell zone. This is a potential sell zone. But we have this target going from M2 to M4. So I think originally I had it like this. Then I said, well, let's respect this central pivot. Good. Great. Strange, right? Right? Strange stuff. You're strange. You're strange. People strange when you're a stranger. What is this? WTI. Right? Again, We sold this hard, came down into support, and then we were laughing at people that would be fool enough to sell now. And think of all those people. Well, it fell $8. It could fall another $8, right? Uh-huh. Well, if you were going to sell it, let's go back. So if you're a bull, this yellow area, admittedly a little higher, but nonetheless, and we even said it during this red candle, that this was a bullish area, you'd be a fool, a complete fool to sell it, right? A high risk, right? But if you wanted to be a bull, this would be a buying area. And the M2 predicts the M4, so you'd be buying it at 48.50. You'd be driving it home all the way back to 54, which is a huge, ridiculous week, right? That'd be just crazy. But how many amateurs do that? Let it fall $8, then sell it, and then lose money as it goes back up, right? It's amazing, right? What's the bearish move if you did want to sell it again? And once again, we talked about this on Monday. On Monday, if you were a bear and you did want to sell again, we couldn't sell it down here at 48, right? That would be what a fool does. So what is the sell if you're a bear? I'll give you a hint. I've drawn it on this chart. Maybe in here somewhere at 50, right? Is 50 a nice psychological level for you? Okay. 50-50 is a weekly central. And this yellow zone around 51 and 51.50, that is also a sell zone, isn't it? So if you were a bear and you did want to sell this, you need to wake up and smell the concrete. Yeah, you guys are going ape crazy on the pound stuff. All right, all right, all right. Let's go back to the pound. Everybody's freaking out. I guess we'll just use this chart here. So everyone's freaking out. Yes, Bank of England, blah, 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 blah. So did you buy it at support yesterday or not? The fact that something's happening now is boring. Yeah, it's going to go up. And then it's going to hit here and stop. So you should already be on the next trade. See what I mean? One member voted for a hike. Great. Amazing. Yeah, great. You know, look, the trade, this is where you should have been cheering, right? This is where the money's made. Think of all those billions and billions of dollars that it took to move this market. Those guys are getting filthy, stinking rich. Why? They acted like professionals. They had trade plans in advance. And they put money in the line, and the market moved their way. Of course, it moved their way. It's support. You thought it was going to go down? That's right. No. So now it's going to go up here, and guess what? It will stop. I'm like, right? What it's doing now, so what? Oh yeah, the news went its way. It was supposed to do that. Okay, so now when it comes up here, be careful. Okay, that's all. Right? Doing something now is so slow and late and amateuristic and all that kind of stuff. Where were you down here when you were supposed to be doing what you were supposed to be doing, right? These guys down here are getting paid. You understand? You want to drive your Lamborghini, you want to buy a yellow Lamborghini? Yeah, you need to earn it, right? Not chase it. I don't want a yellow Lambo. A Gallardo? Please. A couple of years ago, American Express called me, and they're like, if you bump your credit card spending over $1 million, we'll give you a lease on a Giardo. I'm like, no, thank you. No. Two things. I don't want to bump my credit card spending over $1 million. And two, I don't want your stupid Giardo. Call me when you got a Ventador. She said, no, my wife prefers Hondas. Actually, it's not true. She likes Toyotas. So, yeah, act like a pro, bro. Good. Very nice. Very nice. For those that were bullish, they're getting paid. Good. And if you're a bear, you're waiting. Good. Right? Good. All right, go back to the Kiwi. What is the trade plan on the Kiwi? Support around 79, it looks like. Look at this. If it's going to go up, it has to go up now, right? So let's simplify the world here. What were the bulls supposed to do this week? I'll give you a hint. Buy it, right? So they may have wanted to buy it around the M2, right? What did the bears want to do this week? They wanted to sell it. Where did they want to sell it? Oh, I don't know. M3. And what did everyone else do? Who cares what everyone else did, right? Because you're either a bull or a bear or a pig. If bulls buy and bears sell, what do pigs do? Get slaughtered. Yeah, get slaughtered. Okay. And it would have been very frustrating for a bull because I think you would have bought in here somewhere and it broke out and pulled back, and you probably put a second one at 79.50 and it went up. But you know where the problems are going to be in advance, right? Do you think it's predictable as a bull that this weekly M3 at 79.87? So let's just call it on its way to 78, right? Or I mean 80. As a bull now, is it logical and predictable, let's say, not logical, predictable. Is it predictable that somewhere between this this pivot, the psychological level, which is about here, okay, and the weekly pivot, I think that's a weekly, isn't it? I mean a monthly. So let's just say, is it logical that um, that either this area or this area is where your trade will collapse on you? Is that logical? Like, I'll give you a hint. Is that where you should maybe move your stop when you get into here and you're like, well, I think the bears are sitting around this M3 and they want to drop it down to the M1. Maybe I should protect some profit here, right? And if this doesn't do it, this would do it just because of the huge psych level. I think this is a monthly pivot. Maybe it's not, right? But this at the psych level, I mean, so it's either going to collapse from 79.90 or 80.000, right? Where else would it collapse? I don't even know what that black line is. Must be some like huge macro fib. Oh, it is a huge macro fib. Holy smokes. Look at that macro fib. All right, I'm going to get rid of that. It's nonsense. Doop. All right. Let's go back in. Okay. So I want you to think about that too. You need to start getting really good predicting what your competition is going to do. Can you run a sophisticated business, not not let's say preparing for your competitors' strategies? Should you just ignore everybody else in the market and do what you do? Right? I mean, you need to think about your competition, right? So a bull should know these things, even though you're making money as a bull, right? This is incredibly predictable. Look, it's the bear zone. Okay, the bears bulls going to be. Well, the bulls are going to be here. The bulls are going to be at M2. Okay. Now, if you are a bull, why not take the next 5-8 cross up and put your stop just below here? Okay. I remember what this was. Remember, this was buy here and put the stop there. I remember that now. It's only 30 pips or something. It might have even been this. Buy on Monday, put your stop down here. But once again, if you bought down in your buy zone and you're coming up into resistance, you should probably move your stop. Protect some profit. At least be at break even, right? Don't you think? Oops. Don't look at that. Let's go back here. Let me check something. Yeah. All right. What were we going to do now? Oh, peso. Never broke out, but it did break down. How do you handle this? Now you got to move your stop back over here, or not your stop, your horizontal line. Do you sell at the weekly S2? No. Okay. Pretty easy stuff, right? Notice it's the monthly target. Oh my gourd. Okay. So this is the first day of the month. Let's get rid of some of this old. Well, I'll leave it there. This is the first day of the month, and you're supposed to sell this, right? How many people know that? Right. It's factual, right? Okay. Hey, pretty good month. Pretty neat sell, right? Isn't it nice? The target, because of the M, is actually down here. We're on our way to 19, but probably not this week. That's what this says. So that would be an up and then a down. But that's your call. Do you want to be stubborn? We're breaching our conservative target simply to hit our weekly aggressive target. It may be, I don't know if you want to hang on. You need to make some decisions here. It's your call. We've hit the weekly target and the conservative monthly target. So if you're aggressive, you're going to stay and try to drop it down to there. So that's your call. You could just cash out now, be done for the week, and even be done for the month. Just say, I'm done. Right? What should I do with these? Oh, do you love? So one at the 50%. I mean, it's not. I don't know. It's silly, right? Some of this stuff gets silly. In this time frame, 786, then 618, and now we're breaching the 50. Cool. I don't know what to say about that. What do I want to do now? Used to yen. CAD? Do you want to do CAD? Guess we'll do some CAD. Okay. How many people remember doing this analysis? Okay. Did I do it before it happened? Or did I just do it now, maybe when you weren't looking? Maybe before the webinar, I went back and I drew this so I could look really smart. I mean, actually, I did this on Sunday night with a group of 20 people. Whoops! Which means we were in here. And I drew a little yellow area, and I said, "Oh well, you were kind of what you want to do is this is a drop off the monthly target, and and then it's going to come down, and then it's going to go up, and then it's going to go down to here, and then it will stop." I look, I'm not even using candles. It's just lines, price action, and some pivots. Yeah. Can I get a high five? I mean, how accurate is that? Can I get a whoop whoop? I mean, it's CAD for crying out loud. Who wants the CAD? It's like the czar of North America. Like, it's only CAD. Who wants that? Yeah, it's funny, huh? But no, like we actually did that here when we were here. Actually, we're at the exact open as a group. We watched the new pivots come out, and I'm like, well, under these circumstances, it should go up, kick off the pivot, drop, stop right there, and we're done. Uh, 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 uh. And so, yeah, the swing traders and I did that. That was our trade plan for the week for this currency pair. That's cool, isn't it? Remember, it's a random walk and completely unpredictable. Or so you are told. I mean, it's shocking, huh? Look at that. Just yeah. And so what happens now? I don't know, nor do I care. I'm done. It's done. What happens next? I don't know. Let's talk about that next week. Yeah. Cool. So Nick got that one, took the profit, going to Sizzler tonight, huh? Yep, taking the family to Sizzler on that one. Going to Sizzler. We get to Sizzler. All right. So now what's going on? I have dollar strength going on here, but we got to be careful. Oh, this is the one where you said actually you want to buy a dip. All right, fine. We'll leave it at that. Kiwi. Ooh, that's not looking good. You got to be ready though. Are you guys ready? If you're a bull, as a bear, you can't do anything, so don't worry about it. As a bull, though, what are you going to do if it turns north now? What are you going to do if you're a bull? Remember, as a bear, you can't do anything now. It's too late. So what would you do as a bull? Wait for 5A cross, wait for a green candle, wait for a higher high, higher low, treat it like a hammock. What are you going to do? You have to explain it now. Okay. An amateur would sell it now, but why didn't, if you were a bear, what was wrong with 79.50? You didn't like 79.50, you didn't like the midpoint psych level? You didn't like, oh, well, 79.54 was a weekly central pivot. You didn't like that up there, but now you want to sell it, right? It's like, it's laughable after a while, isn't it? You're like, oh, I don't want to sell it way up at resistance, but down at support, now that's good because I see lots of red candles. No, it's way too late, man. So if you can't sell it, then you need to be prepared to maybe buy it if it gives you what you're looking for. So that begs the question, what is it that you're looking for that would make you want to buy it? Thank you, Nick. Eat steak at home without the boiling butter. Yeah, thank you. Yeah, I appreciate that comment. Right? So what would you look for? Do you need an oscillator on this one? Yeah, you can throw down an Aussie. Let's change the template. Okay. Do you think it's going to come down, hit 79, and then head up? Yeah. Remember, what I've taught you is if you're above a psych level, so let's make this a psych level, okay? And you're a bull, so let's just say previous price actions like this, and you're coming back down to a psych level, you buy near 0, and your stop is just below 80, and your target is 40, right? The 80-20 rule. So if you are a bull and you're coming down to 0, you're thinking you want to buy it around 0, and your stop just below 80. This is what trading is like, reality, right? Sit and wait. So let's just put this down. Where is 0? It's pretty close, but not quite. 79, 0. Okay. The next one, let's put just below 80. So let me put that there. Edit, and let's make this 79.75, for example. Okay. Oops. I have to go to a 4-hour, I guess. Still can't get it. Okay, there it is. What's your trade plan? See how close it is? It's only 20 pips or so. It's nothing, right? It's at 25, I guess. But what your trade plan is, I guess draw it. What your trade plan is this to this to this. It's not that crazy, is it? Well, thanks. Well, you're supposed to like send me wine or cigars, or if you're going to put a tip in the tip jar, right? If you're going to put a tip in the tip jar. But soon, soon, brother, soon. Cool, right? So is that going to happen right here, right now? Have no idea, man. Have no idea. So this is why you have to train yourself. First of all, it's falling, right? I bet you some of you guys are just thinking like, I need to sell. I need to sell, right? Charlie says, why 78.80 as well? Why? Oh, no, just it's it's where most stops are. Okay. Okay. So it's falling great, but like I said, if you wanted to sell it, why didn't you sell it way up near the midpoint cycle level? That's where you're supposed to sell it, guys. Way up here. Pick any time frame you want. Okay. You're supposed to sell on these roll reversals, right? So the fact it's falling now, and you're worried that you didn't pick up the 12 pips. I mean, that's garbage. Those are garbage pips. If you're doing that now to pick up 12 pips, 15, 20 pips, those are garbage pips. Okay, fool's gold. Okay, now watch. Okay, now we need to see if something happens here. By the way, I don't even like this kiwi. It's something that we're looking at, right? So patience and discipline means you have a trade plan in advance. This doesn't bother you at all. You're just like, those are garbage pips. What kind of loser sold it here at 25? You know, my God, really? I love smoked salmon, Nick. Oh my gosh. Hmm, that's weird. A wick and a green candle. That's weird. So these people that sold here, right? How are they feeling now? Okay, they've just lost more than half their profit. So now what are they going to do? They took all that risk. They risked their money so that they can make 8 pips? Really? Holy, that must feel terrible. Must be terrible. What a terrible feeling that must be. Yeah. I mean, if you were scared, you could already move your stop to break even if you were really going to trade this scared, right? You're just like you're already up about 10 pips, right? Profit. You're just like, all right, walk away. That's I don't like that type of trading because you still have a high propensity of this to come down, knock you out, and then you got to do it again and stuff. But whatever. So running out of steam. Yeah, 8:30. What's going on the Beast? Yeah, something's going on. Big. Good flip. 22 and a half. Here we're at one. So this is up 100 pips. This is up what 200 pips? 150. Cool. 150 pips. Nice. That's nice. Thank you, thank you. Oh, it's gonna run out of steam soon. Little bit of a challenge here, but a huge challenge up here. Psychological level of 140. Do you think these guys have the guts? Huh? You lost sound? No, I was just babbling on about my 250 pips. Tough morning. Sorry, tired. That is loud. Sorry. Uh, uh, um, huh. Not a lot more to do, huh? USD yen. Okay. Besides having take right. Besides taking profit, we're getting knocked out way up in here. I don't know what else someone would be doing. Right? It says Thursday on my clock, but it looks more like Friday to me. It feels like a Friday. Yeah, there's good stuff going on. That pound is just taking off. It's making me more and more money. Love it. Just let it run. Right? Let it run. Let it run. Let it run. Let it run. What else are you gonna do, huh? What are you gonna do, huh? Oil. We'll see what happens here. You're either buying dips or selling rallies. I mean, that's the thing, right? It's it's straightforward if you have a strategy planned. Lots of targets being hit. Like the week feels like it's done, It's a strange week with all the central banking policy stuff. But that's that. My week's done. I'm going to take the family to the Ritz Carlton to play in the sand, build sand castles. Nothing like playing with your kids. Warm sunny day on the beach. Kiwi we did, Aussie we've done, used again, targets hit, gold. You want to look at gold? Right? See, I have gold. I mean, again, we talked about it yesterday and maybe even the day before, maybe even the day before that. As a bull, we expected gold to go to 1, 2, 3, right? 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, right? 1, 2, 3. Yeah, 1, 2, 3, 4, 5, 6. I think is what I said, just to make it fun. And how close have we gotten so far? Really have to zoom in. It's amazing. 1, 2, 3, 3.32. So the target was 1, 2, 3, 4.56. Can anybody confirm that? I threw it out one time. I don't know how. I mean, I'm really just trying to hit the central, but it's so close, right? 1, 2, 3, 4.56. You may not remember. This is something I babbled out. Anyways, we're pretty close. Pretty close. I don't know how close you need to be. I guess, yeah. I guess I feel spent. I think we just nailed it today. There's just nothing else to really talk about, right? So how about I just say peace on earth. May the pips be with you. May your profits be above average. Um, plan your next trade. Do not respond to what's happening. You got that? You need to be in control. Okay? You need to be in control if you want to be a professional. Okay? Once again, yes, it's going up. Of course it's going up. This is our support area we identified days ago. You should have bought it. And look, it's coming up here. You know what's going to happen? If it comes up to 141, somewhere between look at 141.40 and 141.50 or 60. You know, if it comes up here, it will stop. It will. Trust me, it'll go up there and it will stop. So plan accordingly, man. Right? This actually could be it here as well. It's a beautiful weekly pivot near a psych level and stuff. There's some stuff going on here, but wouldn't it be great if it just one last charge into here and then just drop it off the face of the earth and it'll go back down? Why? It's resistance. You just know it. It's a fact. No one's going to buy it up here. Nobody. Nobody. Nobody's going to buy it at resistance. They might take profit. Someone might actually sell it. That could create red candles, right? Stop chasing price. Here's the Kiwi 1 minute. Don't you remember? I don't know why this moved. We had it exactly 78, or sorry, exactly 79, right? I guess that would be it. Is that fun? Now, these idiots here, how much money did they make? And do you think they actually sold it on this first candle? No, they sold it in here. So they broke even. Just another silly break even trade, right? It's like, why? Why not up here at 79.50? Now, if you had sold it, it's near 79.50 and you were sitting on 40 or 50 pips profit, you came into a psych level. That's, if it's a spot trade, that's enough to take profit and feel comfortable, or even a scalp, right? Right? And do you still say things like, "Oh well, it just dropped 50 pips, but it might fall even farther"? Why not just take your money? Look, just it's down here. You just hit psych level, boom, take your profit. It's just so much better to be in control, isn't it? And you're just like, yeah, boom, I sold it at midpoint psych level, picked up 50 pips, took a walk. Time to go get another cup of coffee, right? Just there is no might in trading. You're either disciplined or you're not disciplined, right? It's like the doctor coming up to you and say, "Well, we got good news and bad news." I don't know. I don't know. It depends on how you look at it. You're pregnant, but you're only a little bit pregnant. You're like, "Oh, well, that's great. Yeah, take some vitamins." You know, I don't know, right? Or the other way around. I got good news and bad news. You're pregnant, but you're only a little bit pregnant. You're like, "Oh man, well, take these vitamins. You'll get more pregnant. Just keep working at it. Two or three, 2 or 3 more times, you'll be really pregnant." I mean, you're either pregnant or you're not pregnant. You're either disciplined or you're not disciplined. You either sold it at the midpoint psych level and took profit at the psych level, or you didn't. You either bought at support on the beast and you're killing it now, or you didn't. Okay, capiche? So I invite you to get really, 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 really disciplined. And the only way to have consistency in your trading is to have the trade plans before they happen, not after they've happened, right? So, anyways, take care of yourself. I want you to succeed, but it's up to you, man. You got to put in the blood, sweat, and tears for years, but it's there. I hope at least one thing I bring to you every single day is that it's possible. And if you believe it's possible and you really believe it's possible, then maybe you're actually willing to fight for it because you believe you can do it. You're like, Wayne, just tell me it's worth the effort. Just show me that it can be done. Just show me that it's possible, and then I will work my butt off and get really good at this because I know it's worth the time and the investment. Right? Remember when I started, I didn't have that. I didn't have anything. There were no books on forex. There was very little on technical analysis. I mean, there was nothing when I started. So you have a lot more than I do or did, and I think you can find success faster if you want it. But let me tell you, even back then, I'm an overachiever. I wanted it. I fought for it. So it comes down to whether you want to fight for it or not, right? But I have a big brain. Well, I'm a hard worker, I think is the better one. I have a big brawn. Big brawn, baby. Big brawn. Yeah. When did I start officially? I don't quite know because I played around with forex for several years before I quit my job, obviously, right? So 2002 maybe. I mean, I remember calling my dad back. I can remember where I was, so I bet I could probably backtrack. But I remember calling my dad. I'm like, yeah, I made like 100 pips today while I was at work, and it's fantastic. It was so much money. I can picture where I was when so I'd have to look that up. But I remember having those conversations. Um, but the truth of it is, well, yeah, we'll leave it for that. But I never even thought about finance. I just remember working my butt off a lot as an entrepreneur and as an investor, like in a venture capitalist and stuff. I remember working my butt off, and then I ran into other people in the industry that like worked 2 or 3 hours a day and did a lot of golfing, and they right members of country clubs and stuff. I got invited over to their house, and their marble bathroom, the shower, no joke, their marble shower had one piece of marble that was, I'm guessing, 15 feet wide. I'm like, what, longer than a horse, right? Like the shower, you could walk a horse into the shower and shower it, right? Bathe this horse in their shower, right? So it was at least 15 feet long, but it was their shower was 15 feet tall into these skylights. They had just built this whole thing. They're like, yeah, we got all this money and we're doing building all this amazing stuff. I'm like, oh my god, are you guys drug dealers? Are you weapons dealers? Right? Are you trafficking prostitutes? Like, how do you make all this money? They're like, oh, we're in finance. I'm like, well, what do you do? Well, I have to call my clients like every 7 or 8 months. Like, what? So, anyways, then the other thing is, I remember I was reading Architectural Digest magazine, and there's a story in there. This guy, he bought an apartment in probably like Trump Towers, some really high end skyscraper in New York, and he bought one on a lower floor for like 4 million. And then a year later, he bought one higher up. So sold that one and bought one higher up for like 8 million. And then he bought another one higher up a year after that for like 16 million. Right? I'm like, 16 million for an apartment. Like, holy crap. And then his budget, because there was nothing, there wasn't even floors. It was just concrete and I-beams. So this Architectural Digest article was about how he had a budget of like $4 million or whatever it was to put walls in and a kitchen and some bathrooms. I'm like, 4 million, right? Like this guy's got 20 million bucks for his apartment. And then when you read at the bottom, it's like John is 27 years old and is a professional. He's a paper trader. I'm like, what is a paper trader? The guy's 26. He's got 20 million to put into an apartment. Oh, what? Yeah. Turns out he's in finance. So all this was going on at the time. I'm like, and I'm just a stupid venture capitalist and just a little peon of a VC too. Like nothing. Like not. It's a wow. Yeah. I mean, we had 300 employees and stuff, but I'm just like, oh my god, what do these people do? Right? I'm like, what do these guys do? Oh my god. And I start wondering, like, I'm not in the right business. And then I ran into forex, and it's $2 or $3 trillion a day in turnover. I'm like, what? Oh my god, that's a place where I could possibly make money. And then I read about how it's only for big bankers, right? And I'm thinking they're, you know, fat white men, gray hair, three-piece suits, sitting at the top of a skyscraper, smoking cigars, laughing at the rest of the world. And I realized that's what I want to do. That's what I want to be when I grow up. I want to be a big, fat, white guy with gray hair, smoking cigars in a three-piece suit, the top of a skyscraper. Like, oh my God, that's what I want to do. Yeah, so I got the gray hair, I put on the weight, smoking the cigars, bought the three-piece suits. I'm good, man. The fat part's easy. All you have to do is inject insulin into your stomach every morning and drink a bottle of wine every night, and boom, that's taken care of. Okay, so being consistent. How long does it? What do you, well, how would you define consistent? Like 30 profitable open trades? Do I have a loser? No, I got one just above break even. Well, let me tell you, you should be consistent before you quit your day job. Right? So, and remember, if you are a professional, that is your goal. And your goal is to make money with as little volatility as possible. And you want small lot sizes relative to your account size and all these things. You want to reduce the risk. And as soon as that clicks with you, reducing lot size, reducing risk, taking away pressure to hit home runs all the time. Once you get to that point, then your consistency will pick up because you can afford to wait for the better entries and you can afford to stay in the trades longer. You're not so desperate for, you know, taking your 50 pip profit, right? Do you guys remember that on oil? We talked about it. And I'm like, look, I don't want to get out of this. I sold it at a great place. I got my stop, set. It's good. It's a good trade, right? Why get out of it? And I got lucky on that one because it ended up dropping like $5 farther than I thought it would, right? I'm like, why would I get out? I did all the hard work already, right? So when you get to that patience and discipline things to discipline to enter and get out when you're supposed to, patience to let it set up and all that kind of stuff, it'll happen for you. Okay. So I don't like to pip and tell and all that kind of stuff. So Forgiving me for showing you my trades, but you asked. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Hopefully, YouTube will allow me to upload this. They didn't yesterday, so take care of yourself, you hear? Cheers.